Hi, welcome to Archiversity online classes. In my previous lecture, I shown you how to calculate summary statistics of our stock prices using data analysis Toolpak. In data analysis Toolpak, just by clicking on descriptive statistics and selecting your data, you can calculate summary statistics like a mean, median, mode, or skewness, standard deviation, etc. in few clicks. As you are saving a time on performing analysis, you can spend more time on analyzing it. Now, if you remember, in the previous lecture, we calculated descriptive statistics for 1 year data, that is 1 year daily close prices of Sun Pharmaceutical. And you observe the minimum value and the maximum value there. However, to get a more in-depth understanding of that, I suggest you to perform descriptive statistics for a 6-month period as well as a 1-month period. Now, by doing this, you will be able to understand the price movements in more detail. That is one. And second is that the minimum value that you calculated using a descriptive statistics in regular practice, it is called as trailing 52-week low price. And the maximum price there you calculated is called as trailing 52-week high price. In this lecture, I am going to extend that learning by adding a 6-month price analysis as well as 1-month price analysis, so that you will be able to appreciate the differences between 1 year period, 6-month period and 1-month period. The reason for choosing 1 year, 6 month and 1 month is, as far as I am concerned, I consider that 1 year is a long time period in security analysis, whereas a 6 month is a moderate and 1 month is a short period. So if you are doing a trading of a day-to-day trading, then it is preferably to make analysis of a 1 month. And if you are investing for a long-term period, it is better to analyze for a 1 year. So this is my way of interpreting. Others may have a different ways of defining the long horizon and a short horizon. Now we try to find more insights into a Sun Pharma stock price for a trailing 1 year. Here is the price information of Sun Pharmaceutical, an Indian pharmaceutical company which is listed in a Bombay Stock Exchange as well as a National Stock Exchange. This data analysis is based on a daily close prices from Bombay Stock Exchange of India. Here the minimum, maximum, mean values which you get from a descriptive statistics of a data analysis Toolpak. In practice, these are called as low price, high price and average price. So normally we'll say that 52-week low. So when you say 52-week low, mean within a 1 year, what is the minimum price? That is a 52-week low. And 52-week high is the high price, that is a maximum price in a 52-week. Now we look at this, say in a 52-week of a 1 year, there are 247 observations. In a 6 months, there are 124 observations. And in a month, there are 21 observations. And the time period is September 2019 to August 2020. Here, the minimum value is 324 and maximum is 555. That means 52-week low is 324 and maximum is 555. But if you observe here, in a 6-month period, minimum is 324, maximum is 525. That means the minimum values which you identified in a year 1 is not actually the year 1, but it happened in the last 6 months. And if you observe the 1 month, here you see that the maximum is 555.80. That means in a 1 year, the maximum price is attained in the month of August 2020. Alright. So earlier years, it is not the same. And the minimum price attained is during a previous 6 months, that is a March to August 2020. This is because of a pandemic scenario, where because of in a March month, and so there is a corona effect, and because of which the pharma stock price has fallen to 324. Now the average price overall in a year, average price is 444, whereas during a previous 6 months it is 464, and this time period, that is a previous month, it is 529. And very important thing that you need to look at is the range. So in case of a 1 year and a 6 months, the stock price ranges between 231. That means there is a wide range in the price of this stock. When the range is high, then it is very difficult to predict the stock price movement. Whereas in the month of August, the price range is rupees 37.30. So here we say that the range is 37.30, which is very low. That means the stock is currently trading in a trading range. And next is that look at the standard deviation. So the standard deviation explains you how actually the stock price deviated from its mean value. In case of September and August, the mean value is 444 and the standard deviation is 45. That means if you take a one standard deviation, then onto the right side the price may be 489, on the other side it may be a 400. Whereas during a pandemic time period, there is from March to August, the mean is 464 and the standard deviation is 54. Here the standard deviation is high when compared with the 1 year one. That means when the standard deviation is high, it indicates that there is a high fluctuations or volatility in the stock price. So this 6-month period, Sun Pharma witnessed high volatility in the stock price. And coming to the August month, here you will see that the standard deviation is 8.67. So this says that in August month, the stock is more stable one. There is no high fluctuations in stock price in the month of August. This also reflects in the in terms of a minimum and maximum price. So the minimum price is 518 and maximum is 555. So the price is ranged between these two. Now looking at the skewness and the curtaceous values. So if you observe the skewness values of the 1 year and 6 months, you see that they are in a negative. That means during this period, most of the times the price is below the mean price. In the sense here the mean price is 444 and here it is a 464. That means most of the times the price is below the mean price. Whereas in the month of August, it is positive one, that is 1.44, which means the stock price is trading above average, that is a 529 and above it was a trading. Most of the times it has a positive values. This is how you need to interpret the results to have a more understanding on the stock price movements. So as now the stock appears to be more stable in terms of a less standard deviation, and also the range is also very low. This is advisable to invest in this stock. Whereas if the range is the same like a 231 and standard deviation is high, in such a case you are taking a high risk because the price is highly volatile. This is one of the ways to interpret the summary statistics. But as you are making an investment, keeping the future returns in mind, then this information may not be much helpful to you. In that case, you need to calculate the probability of a price. In the sense, if you are making an investment today and you want to sell the stock for after 1 month or after 6 months, then what is the probability that the price will be after 1 month or after 6 months? For that purpose, you need to draw a histogram, also called as a frequency distribution table. And using a frequency distribution table, you can calculate the probability values. That means what may be the probability of the price to be in a particular range, and what may be the probability of the price to be in another range. In my next lecture, I'm going to explain you how to calculate frequency distribution table, also called as histogram, using Microsoft Excel data analysis Toolpak. Thank you.